Welcome back. You're tuned into Market Fatafat, where we are taking you through all the stocks that are buzzing away in trade. But before we get started with some more stocks, let's connect to the management of India Pesticides. Satya Prakash Gupta, who's the CFO of India Pesticides, is joining us now. Hi, Mr. Prakash. Thank you so much for joining us today. Well, tell us, what is your overall outlook for FY25, specifically on the margin front? How do you see the freight costs and the overall export scenario currently, and when do you expect the recovery to come in? Also, how do you see the domestic sales given the good monsoon season that we are experiencing?
During first quarter, we have achieved EBITDA 15%. We are seeing sign of gradual recovery in international market. Since our export turnover has earlier declined, we are seeing that inventory destocking is at the last stage. So we are seeing good traction of demand from international customers, and we are expecting that price will rise. So we are expecting EBITDA at least 100 to 200 basis point increase from current EBITDA level of 15% for this FY25.
Good afternoon, Satya Gupta ji, as well as Vishwasarup ji is also there with us, the director at India Pesticides also. Good afternoon, gentlemen. This is Vinny also in the conversation. Now, what I also want to know is, Satya, in terms of there's a lot of pricing pressure and inventory build-up in agrochemicals overall. What is the current situation, and are you expecting any improvement there?
We are expecting good growth from international market from quarter 3 onwards. Even currently, we are sitting in a good export order situation. Even earlier, international customer used to place order a quarter in advance, but currently when they are placing order, they need immediate supply. It shows that inventory level has declined sharply in international market. So we are expecting good growth from quarter 3 onwards, since our main export season is Q3 and Q4.
Right. Mr. Swarup, I'll come to you then. The company is doing a capex of around 110 crore rupees. From that, how much revenue is possible, and what is the timeline for the completion?
So we are doing 110 crores capex in both the companies. We are doing in the existing IPL. We are doing 60 crores in the new plants in Sandila, and another 50 crores we are doing in our subsidiary Shelby Specialities. So we hope that by next year, next financial year, the Shelby Specialities will contribute largely to the turnover. Whatever capex we are doing in Shelby's plus the capex we are doing in Sandila unit of India Pesticide, that will also contribute significantly to the turnover.
Right, Mr. Swarup, just one more thing that I want to know is that you've mentioned that the company is expanding its list of customers. Specifically, which regions are you targeting for exports?
We are targeting the existing regions, where the European markets, the Australian markets, the American markets, we are targeting all these 3 areas, plus the South American region as well.
All right. Thank you so much, gentlemen. Thank you for joining us. We will let you go on that note. But let's get started with the countdown for all the stocks that are buzzing in trade. And for now, Chandan Taparia, who's the derivatives and technical analyst at Motilal Oswal, who is joining us, and from research, Snehi is with us. Chandan, I'll come to you then. Britannia is what you have picked out for us. Tell us, what are you seeing on the charts for this one?
Yeah, thanks for having me. We have seen a roller coaster ride in the market. The Nifty has corrected by more than 1,200 points from its recent top in last 3-4 days, led by weakness in the global indices. However, today tried to attempt the recovery but failed to surpass 24,400 and again drifting lower. So in the entire scenario, when volatility is increasing and global markets are having more worry, I believe FMCG's stock will do well, and that is the reason that here we are talking about Britannia. The stock has given a consolidation breakout, negated its lower lows of last 4-5 days, moving after the consolidative move of last 12-15 days. So expecting further run up, one can buy with support of 57.60, and I'm expecting this stock to head towards 61.50 to 6200 zone.
an eye out on that. But I just do want to mark the numbers that are flashing at the bottom of your screen. Vedanta has reported its numbers. Seems like revenue slight bit better than I think what the ET Now poll was at, right? And what we have in terms of the profits of the company, also an improvement coming in there. Net profits at 3,606 crores versus 1,369 crores last quarter is what we were seeing coming in. As of now, when I'm looking at it, there is a net current tax expenses of 1,566 crores is what we are keeping an eye out on. So yes, that is one there, but that was there even last quarter as well. So keep an eye out on that. But it seems like a decent set of numbers that came in from the company. We did see a bit of a spike up coming in, and then again it's come back to the levels that it was trading at. But as of now, Vedanta managing to hold on to gains of 0.8% in trade. Moving on to an FMCG name then, and Marico, that's the one we're keeping an eye out on, reported its numbers, Q1 numbers. Inline set of numbers came in from Marico. Now, two factors that are impacting Marico today. One is in terms of obviously the Bangladesh story that is playing out and the concerns over there, because Bangladesh accounts for around 11% of Marico's revenue. So yes, around those concerns, there's a bit of an issue. Even Goldman Sachs is highlighting that maybe that could be a near-term concern for the company. But other than that, numbers were in line. They're seeing improving volume growth trends. Revenue growth has improved sharply. Mainly because also as pricing is improving, volume growth is seeing an improvement. So Goldman Sachs continues to maintain their buy rating. Target price is what they've given is around 715 rupees per share from previous target price of 660 rupees per share. Other than that, Jefferies on Marico also is maintaining a buy rating, and they've given a target price that one could see is of around 780 rupees. They've hiked the target price from a previous target price of 650 rupees. Improving growth trends is what they are highlighting. Very positive outlook in terms going forward as well. Acceleration, volume growth, pricing growth has turned positive. So keeping an eye out on that. They too are just highlighting the concern about Bangladesh. That's why today maybe the stock is a bit under pressure. Trading at the day's lowest point, 5.5% downtick.
All right, Chandan, IEX is the counter that you've picked out for us. In fact, IEX is on the radar for quite a few techies. This one has been trading around its 52-week high. Tell us, is there more up move? How should one play this counter?
Yeah, this stock is holding well. If I look at the monthly chart, it has been holding well above 26 months high level. Supports are gradually shifting higher. The stock is resilient at the time of market decline, which clearly indicates that the strength and momentum could continue. It has been moving in a narrow range from last 3 days, and a small follow-up above 195 could see the next leg of rally. So positive move could continue with support of 183. One can look for an upside. Target was 205.
All right, moving on to another counter that is in focus today, and that is Tata Chemicals. That is another earnings candidate. Let's look at the results then. The revenue is seeing an uptick of 9% on a sequential basis. The net profit is also, it's actually got net profit of 190 crores versus a loss of 841 crores on a sequential basis. Margins are also seeing an uptick of 240 basis points on quarter-on-quarter basis, and the EBITDA is also seeing an uptick of 29%, coming in at 574 crores versus 443 crores on a sequential basis. Currently, the stock has actually eased off those gains of those morning gains, is currently trading flat with marginal gains of 0.2%.
Okay, that's Tata Chemicals for y'all. Let's move on to the next stock. And Chandan, you've picked out IGL for us. What's the word that one should be watching out for IGL? What is the target price that you're keeping? Currently, stock is trading at 541 rupees. Are you expecting a further upside?
Yeah, overall setup is positive, and we have noticed that multiple supports are clearly visible near 515, 520 zone. It witnessed a profit booking decline in last 3 days, but it has negated the same today. Technically, it has been holding well above this 50-day exponential moving average. So positive move could be seen. One can buy with support of 530. We can look for an upside. Target was 562.
All right, Snehi, coming to you, then Sirma SGS is what you have picked out for us. An earnings candidate. Tell us, what does the report card look like?
Well, absolutely, Ankita. Weak set of numbers coming in for Sigma SGS this time around. Revenue has come in at 1160 crores versus 601 crores, which is a jump of 93%. But here's where the trouble starts. Net profit has come in at 20 crore versus 28 crore rupees, which is down 28% year on year. EBITDA has come in at 45 crores versus 37 crores, so an uptick of 20% on that front. EBITDA margin, however, is spooked because 3.8% is what the EBITDA margin is for Q1 versus 6.1%, which is down 230 bips on a year-on-year basis. So this is why on a weak set of numbers, the stock is not doing pretty well as of now. Almost 6% low in today's trade. The company has also reappointed Mr. Jasbir Singh Gujral as the managing director. So well, poor set of numbers coming in and the stock is under pressure as of now.
Okay, let's listen into what the management also themselves had to say in terms of the guidance and the outlook going forward.
We have guided around 7%, so around ballpark about 7% with a 40-45% growth rate in revenues is what we are targeting, and we are confident of doing that in this year. We are very confident of achieving this. We are not revising them upwards or downwards. Going forward with the order book position which we have in hand, we believe we are on track to achieve the top line and the EBITDA margins and generate a positive cash flow. We have an order book of about 4,500 crores as of 30th of June 2024. Bulk of which it is from the high margin business. Hence the confidence that we would be able to achieve the top line and the bottom line, which is around 7%, 315 crores, what we had guided the street with about 4,500 crores of revenue. We are on track to achieve that. In the coming quarters, healthcare would grow significantly. First quarter was a very subdued business on the healthcare business, though compared to last year, it has grown because even last year, the healthcare was a bit low. We expect the healthcare business to contribute about 350 to 360 crores this year.
All right, with that, it's time for us to slip into a short break. Don't go anywhere. After the break, lots more stock coming up. Welcome back. Here, tune into Market Fatafat, where we are taking you through all the stocks that are buzzing away in trade. Chandan, Glenmark is the name that you have picked out for us. Tell us, what are you seeing on the charts for this one?
Yes, so as discussed, most of the heavyweights counter are falling due to the weakness in the market, but selective FMCG and pharma stocks are holding well. So Glenmark is one of the strongest names, which is resilience at the time of market decline. Oro longs are intact with multiple support near 1400 zone. So I believe 1400 could provide the buy on decline opportunity for an upside target towards 1500 in the counter.
Okay, that's Glenmark for y'all. Let's move on, talk about 3M India. That's the stock we're keeping an eye out on. Reported its numbers a short while ago. Revenues saw a decline of around 0.3%, so almost flattish because this time it's 1047 crores versus 1050 crores last year. What we're seeing in terms of the profits of the company, a growth of 21% YOY, while in terms of the EBITDA also, we're seeing a growth of 18%, margin seeing a sharp improvement of around 300 basis points, 19.6% versus 16.5% last year. 3M India managing to hold on to gains of 1.6% as of now.
All right, moving on to the other counter that is in focus today, and that's Birlasoft. It is on the back of a brokerage note, Macquarie, which has given Birlasoft an upgrade to outperform from neutral, and they've cut the target price to 720 rupees from 780 rupees. And they feel that the entry point is very attractive. They have upgraded the stock on the back of that. The Q2 is likely to see better revenue performance and deal wins as per the management, and also they've continued the strong growth in the BFSI segment. It suggests that the new sales propositions are working very well for them, and on the back of that, this upgrade is coming from Macquarie and Birlasoft, and as of now, we can see the stock take up 1% in trade.
Surely keeping an eye out on Birlasoft over there. But let's move on, Snehi. All the realty stocks, that's what we're keeping an eye out on as well today. What is the reason for it being focused?
Well, absolutely, Vinny. So, realty stocks, remember the real estate has been a pack that has been one of the top losers over the last couple of weeks of trade, but Nifty Realty has done pretty well today. Now, sources tell us that the government is likely to make some changes to the budget budgeted proposal to revise the LTCG tax on real estate transactions. The Finance Ministry is actively considering the concerns expressed by the industry, and the government has also taken a note, and some relief measures are likely to be taken. Industry has requested the government to provide customers with the option for selecting the regime, the old one versus the new one, and the demands related to grandfathering the purchase of all asset classes, including the relaxation and implementation date, have also been made. Relief is likely to be provided through the amendments to the finance bill, which is likely to be tabled between 4 and 5 p.m. today. So we'll be closely watching out for any announcements on the potential withdrawal of indexation, or even an easing off in the LTCG, or a grandfathering clause that the street is highly expecting to be announced today. But on the back of that, it's panning out to be positive for all of these real estate stocks. Good moves coming in across a couple of real estate names today.
All right, coming to you, Chandan, Jubilant Foodworks is what you have picked out for us. Good moves coming in the last 6 months. Tell us, is there more up move? How do you play this counter right now?
Yes, so Jubilant Food comparatively holding well. We have seen good buying in counter like Zomato, and now Jubilant Food from the QSR segment looks good. Slow on yesterday, it has been moving upwards, and supports are intact with rising trend line in the holder of moving average. So with support of 585, we can look for an upside move towards 630 zone.
All right, moving on to Graphite. That's an earnings candidate. If you look at the numbers, it's an earnings candidate. The numbers don't look very positive. Weak set of numbers coming in for Graphite. I can see a decline of 30 crores as far as I beg your pardon. There is a net profit of 236 crores versus a loss of 30 crores on a year-on-year basis. The revenue is down 2.5% on a year-on-year basis, coming in at 728 crores versus 747 crores. EBITDA is also we've seen an EBITDA of 113 crores versus a loss of 91 crores. So I beg your pardon, it's a good set of results coming in for Graphite. The stock is seeing an uptick of 3.5%, more than 3.5% in trade today.
Good set of numbers, 3.5% uptick there. But let's move on and see Indigo. Why have you kept this one on your radar today?
Well, Vinny, Indigo had an event yesterday. It was also their 18th anniversary, and on account of that, Indigo launched Indigo Stretch Business Class for 12 routes, including Chennai, Hyderabad, Bangalore, Mumbai from mid-November. Now, the CEO, Peter Elber, said yesterday on the occasion of its 18th anniversary as India's top-line airline, he said that the carrier, which eyes to tap growing number of premium flyers domestically, will open business class bookings from 6th of August for travel from 14 November, and the fares will start at 18,018 rupees. Indigo will also be launching a blue chip loyalty program, which will start around September as well. Further, meals for the premium business class will be catered by Oberoi Hotels. Now, we also have a brokerage note coming in from JP Morgan this morning on Indigo. They've maintained an overweight rating with a target price of 4,950. They're saying that the expanding international business with new innovative routes is a positive. Spreading wings into business class, building customer loyalty and stickiness is also good. Believe these initiatives could help Indigo maintain its dominant market share and profit leadership. That's the note coming in from JP Morgan. But well, yes, stock holding up 1.2%.
Okay, let's move on to the next stock. And Chandan, ACC is the stock that you've picked out for us today. What is the target that you're keeping for ACC?
So here we see the negative structure. It has been making lower top, lower bottom on daily and the weekly scale, trading below key moving averages, and the entire sector is also witnessing selling pressure with built up of short positions. So weakness could continue with hurdle of 24.10. I guess it can dip down towards 22.50 marks.
Okay, surely keeping an eye out on ACC there. Let's move on, talk about ONGC also. That's a stock that we're keeping an eye out on the back of its numbers. Standalone basis, quarter-on-quarter comparison, we're seeing that revenue is seen at just an uptick of 1.8%. EBITDA of the company, that's an uptick of 7% there. Margins, a slight bit of an uptick there, keep an eye out on that. But net profit seeing a decline of almost 10%. ONGC as of now is trading with cuts of almost 0.5% in trade. I just want to mark the markets quickly because yes, we're seeing a further more fall that's come in for the markets, down almost 1/10 to 2/10%. 24,000, just holding on to that level. Let's pull up the Nifty, please, and that is at 24,000 mark right now. The Nifty 24,025 is what it's trading at. So yes, very close to the 24,000 mark. Nifty back in the red, and further decline is what we have seen for the markets as of now, Ankita.
Absolutely, Vinny. But we also had an exclusive with the DIPAM Secretary Tuhin Kanda Pandey on ET Now. With the value creation in focus, the government needs to be mindful of effective implementation of the PSU capex. That's the word coming in from the DIPAM Secretary. He also shares that they have a CPSE target of 3.5 lakh crores for this fiscal year. Let's go across and listen into what he had to say.
Having now focused and emphasized on value creation strategy, and not really having a strategy which is linked with the achieving fiscal revenue. Even on that side also, I think disinvestment receipt was the only one which was being focused upon, not as much as the dividend and other funds receipts from the CPSEs. Now, in the holistic sense, we are looking at total receipts, one, and secondly, we are not really trying to really achieve a target in order to do that. So, we would be quite mindful of the way market perceives the value creation, and quite consistent with the interest of minority shareholders in that. I think diversification is also happening. As I said, that many of the oil companies and coal companies, companies and thermal energy, they are having a lot of green capex which is happening, and that will continue to be going forward a focused area for growth. There are good indications that capex growth is proceeding smoothly, and I think we will be targeting something like 3.5 lakh crore as the capex from the CPSEs this year. And dividend, as regards dividend, we have a certain dividend target, but point is dividend will again depend upon how the markets are, what is the profitability are. Given our focus on performance and expecting that our growth in Indian economy will be robust, I would expect that we would have good healthy dividends as well.
Okay, and with that, we are absolutely out of time on this edition of Market Fatafat. So thank you so much, Chandan, as well as Snehi and Rosha for joining in with us today on the show. And it's going to be a goodbye from Ankita, myself, as well as the team who put this show together.